Hello everyone, welcome to another video of my income tax series. My name is Gaurav Lohia and I'm a chartered accountant. In today's video, we will discuss about income, the definition of income, what is the definition of India and agricultural income. So let's get started. So income. So section 2 clause 24 of the Income Tax Act defines what is income, and it is a very exhaustive definition. Now, if you recall our previous video, we had discussed about two types of definition. One is inclusive and another one exclusive. So income is an inclusive type of definition. What does that mean is whatever is defined under income, that is obviously income, and anything which resembles that is also part of income, right? So whatever is defined as income is obviously income, and income is much more than that. Income is much more than that, right? So let's get started. What all forms part of income? So the first thing is the profits and gains. Any profits and gains you earn is income. Second is dividend. Any dividend received is or earned is an income, right? Third, value of any perquisite or profits in lieu of salary. What does that mean? Now, salary, as you all know, whatever you receive from your employer at the end of the month is part of your income, right? Apart from that, if you receive any other benefit, either in money or in kind, also forms part of salary, right? Then special allowances granted to meet any official expenses, that is also part of your income. Any allowances granted or received to meet your personal expenses, that also is part of your income, right? Then benefits received from a company by a director or a person of substantial interest. If a director of a company or any person who has got substantial interest in the company, if they receive any benefits from such company, then that is also part of the income. Profits chargeable under section 28. Any profits as per the section 28. What is section 28? We will discuss later. Any profits received under section 28 is also part of your income. Deemed profits. So in certain cases you might actually not receive profit, however the income tax might deem it to be a profit. That is also part of your income. Any capital gains under section 45. What is capital gains? Any profits earned on the sale of a fixed asset or a capital asset, that is part of your income. Winnings from lotteries, crossword puzzles, horse races, card games, gambling, prize money, that is also part of your income. For example, if you earn any prize money on a game show, that is also part of your income, right? Employer's contribution received from employees. For example, your PF, ESI, or any superannuation fund, right? That also forms part of your income. Any sum received under key man insurance policy. So here the main term is key man insurance policy, not all the insurance, only any sum which is received as a part of key man insurance policy, then it is income. Fair market value of inventory converted into capital asset, right? That is also part of your income. So if you convert your inventory into a fixed asset, that becomes a part of your income. How? We will discuss that later. Advance forfeited on failure of capital asset transfer negotiation. Say for example, for a sale of land, you receive an advance. You would have received an advance, or you also call it as token money. You would have received that, but the sale does not happen and you forfeit that advance. That also becomes part of your income. Money or property received without consideration or for inadequate consideration. Let's say the market value or a stamp duty value of an asset is 10 lakhs. However, you receive only 5 lakhs. The balance 5 lakhs which you have not received is also part of your income, right? Here, what you have to remember is income need not be something which you have actually received in hand. It could be something where in certain cases it could be something that you have not received, but still it is part of your income, right? Compensation for termination or modification of employment. Let's say there is sometimes you might have heard something called as a notice pay. Any amount paid to a company towards notice pay, that is also part of your income. subsidy, grant, cash incentive, anything of that sort received from a government, that is also part of your income, right? So this is the definition of income, which is an exhaustive definition. It covers all these, and anything which resembles this is part of your income, right? Now, there are certain important distinctions which have to be made in income, right? Mainly there are 5 distinctions which are made under income. What are those? We'll understand now. One is regular versus casual receipts. What is regular receipts? Regular receipts is something which you regularly receive in your business or your employment, right? Say for example, salary, you receive it every month. Business profits, it need not be at every month or something. At regular intervals you keep on receiving business profits as well. The income which you receive from your regular activities is regular receipts. However, there are certain other receipts which are irregular in nature, or once in a while you receive it, which are called as casual receipts. Say for example, winning from a lottery or gambling or prize money, right? These are casual receipts, casual in nature. Both are taxable, right? Both are taxable. Revenue versus capital receipts. Revenue receipts, again, your business profits is revenue receipts which you regularly receive. Capital receipts is something when you receive when you sell an asset. Say for example, you have a land which you are selling it, and any money received or any profits made on that sale of capital asset is capital receipts. Net versus gross receipts. Ideally, generally, what happens in income tax, only the net profits are taxable. That is, you have your gross profit, all the allowed expenses or whichever expenses are prescribed are deducted, and whatever is left out, only that is taxable. However, in certain cases, the gross receipts are also, the gross receipts can also be taxable. There is an exception here which is called as presumptive income. We will discuss what presumptive income is in later classes when we come to profits and gains of business or profits and gains of business or profession, right? Then due versus receipt basis. In income tax, both are both are considered, right? So income tax allows, first of all, both the systems, mercantile system of accounting or cash basis accounting. It need not, income tax does not prescribe you have to follow this particular system of accounting, right? So either you follow mercantile system or you follow receipt basis, that is cash basis, that is also fine. There are certain cases wherein the income is taxed only on receipt basis. Say for example, when you receive interest on enhanced compensation, that is taxed only when you receive the interest, not on accrual basis. Then application versus diversion of income. Application is what? Obligation after income reaches SSC. So when you receive an income, only then it is taxable. Say for example, salary, when you receive the salary, it becomes taxable. Diversion is before you receive the salary, you have transferred it to someone else. That is diversion. So then in those cases, it might not be taxable in your hands, right? So this is the definition of income, right? A very exhaustive definition. It is very important for you to remember this, because if something does not form part of income, then you cannot charge income tax on that. As simple as that, right? Next we will understand what does India mean. Why it is important that what does India mean? Because any income which is earned in India can be taxed under India, in India, right? If you earn an income in India, only then Indian income tax can be charged. There are certain exceptions to it. We will look at that later. But right now, remember, any income which is earned in India, only then Indian income taxes can be charged, right? So for that matter, we have to understand what is India. So how does the Income Tax Act define it? So section 2 clause 25A of the Indian Income Tax Act 1961 defines what is India. What does it say is, India is the territory of India as per the article 1 of the Constitution. Territory of India as per the article 1 of the Constitution. What does article 1 say? Article 1 says is, India, that is Bharat, that is the union of states, right? India, that is Bharat, shall be the union of states. Next, it says that the states and the states and the territories thereof shall be as specified in first schedule. So whatever is mentioned in first schedule, all those states and territories form part of India. Then further it goes on to say the territory of India shall comprise the territories of the states, the territory of the states, each and every states and its territories, the union territories specified in the first schedule, all the union territories, and such other territory has may be acquired. If today India occupies any other country or any part of a country, that also will become part of India as per the definition of India in Article 1 of the Constitution, right? This is only the first point in the definition of India in income taxes. The first point says the territory of India as per the Article 1 of the Constitution, right? Next, the second point is territorial waters, seabed and subsoil. What does that mean is, you have the coast of India. From the coast of India, 12 nautical miles is your territorial waters. 12 nautical miles from the coast of India is your territorial waters. All that territorial water is India. The seabed underneath, when you go down the sea, you have the first land which you reach is called as a seabed. That is also India. And any soil which is underneath that seabed, that is also India. Next, continental shelf. Third point is continental shelf, right? And then the exclusive economic zone, that is up to 200 nautical miles from India is called the exclusive economic zone. Up to 200 nautical miles from India, from the coast of India, 200 nautical miles. Let's say, for example, you are standing at the coast of India at Bombay. If you go 200 nautical miles into the sea, that is the exclusive economic zone of India. Any business activity or any income earned within that within 200 nautical miles of India will fall under India. Other specified maritime zones and airspace above territory and territorial waters. Any other maritime zone which is defined and the airspace above it. So whatever we have discussed up to 200 nautical miles of India, the airspace above that is also India. Right? So this is the definition of India as per the Income Tax Act. Now, moving on to the next topic, which is the agricultural income, right? Agricultural income. So now, what is agricultural income? There are three parts or three main incomes which are defined to be as agricultural income as per the Income Tax Act. What are those? First, rent or revenue from land. What is rent or revenue? Rent, you let out a property. Whatever money you receive for letting out that property is called as rent. If you rent out an agricultural land, or you lease out an agricultural land, the rent you receive on that agricultural land is also considered to be an agricultural income. However, there are certain conditions to it. What are those conditions? One, the rent must be derived from the land. The rent must be derived from the land. The land should be situated in India, right? Obviously, the land should be situated in India. The third condition is the land must be used for agricultural purposes only. So I have a land, for example, I rent it out. If the tenant takes up agricultural activities on that particular land and pays me some rent, then that rent will become agricultural income. If the land is not used for agricultural purposes, then the rent I receive will not be agricultural income, right? So the first point is rent received for a land. Rent or revenue received for a land is agricultural income. Second, right? What is second? Income from agricultural operations. So any agricultural operation which is undertaken, any income received from that is also considered to be agricultural income. What is agricultural operation? Agricultural operation is your sowing, tilling, winnowing, cleaning, drying, crushing. All these forms under agricultural operations. Apart from this, any income which you receive from sale of agricultural produce, that is also agricultural income, obviously, right? If you're producing some agricultural products and you sell that, any income you derived is agricultural income, right? That is the basic structure, or that is the basic understanding of agricultural income. The third point in agricultural income is farm building income. What is farm building? So now let's say I have a farming land, I have an agricultural land. With that agricultural land, either on the agricultural land or somewhere around the vicinity or of the agricultural land, I have constructed a small house or I've constructed a warehouse, right? Any income derived from that house or warehouse, either in form of rent or storage charges or warehousing charges, is also agricultural income, right? Here the important thing to note is the building should be either on the agricultural land or immediate vicinity of the agricultural land. It should either be on the agricultural land or adjacent to agricultural land. It should be used for agricultural purposes or dwelling of the person who is carrying on agricultural activities, right? Say for example, I have a house on my agricultural land, and that is rented out to the person who is carrying agricultural activities on that land. The rent derived from that is also agricultural income. And if I use it as a storage, or if I rent it out as a storage, then also it is agricultural income, right? Now, if the agricultural land is, these three were mainly the types of agricultural income, right? What is it? Rent received from land, any agricultural operations or sale of agricultural produce, and the farm building adjacent to agricultural land, right? These three are agricultural income. Now, what if the land is situated in urban area? So if the agricultural land is situated within the urban area, I can still obviously claim the agricultural income. However, the capital gains arising out of that would be taxed as capital gains only. If I sell the urban agricultural land, that will not be exempt under section 10.1. What is 10.1? We will see further in detail how is agricultural income taxed, what are the exemptions we can claim. We'll see that later. However, for now, just remember that if I have an agricultural land which is within the defined urban limits or municipality limits or city limits, then I cannot claim exemption on that. On sale of that land, I cannot claim the exemption, right? Now, there are certain incomes which, though on the surface look to be agricultural income, or we assume that okay, this might definitely form part of agricultural income, but are not actually agricultural income, right? So income tax specifically provides that these type of activities are not agricultural in nature, and so we will not provide agricultural income benefit. What are those? Breeding of livestock. If you breed any cows or buffaloes, sheep, horses, any livestock, breeding of any livestock is not an agricultural income. Poultry farming is not an agricultural income. Fisheries is not an agricultural income. Dairy farming, dairy, that is, you deal in dairy products, extraction of dairy milk from cows, buffaloes, then also it is not an agricultural income. Forest trees of spontaneous growth, any activity of planting trees or something where human skill or labor is not involved or very limitedly involved, then it is not an agricultural income. Any managing agent's commission, let's say for example you are a managing agent who just manages the agricultural land, then the income which is derived by you is not an agricultural income. Butter or cheese made by factories is not an agricultural income, right? So clear what is not an agricultural income. So these are not an agricultural income: breeding of livestock, poultry farming, dairy products, fisheries, forestries of spontaneous growth, managing agent's commission, butter or cheese, right? Next, there are certain rules which say that only a certain part of your income will be agricultural income, certain part would be considered as business income. Why is that, right? So there are many instances or many activities which include both agriculture as well as business or manufacturing. And without the manufacturing activity, the agricultural produce cannot be brought to market for selling. Right? What are those activities are? Some of the activities are, let's say, rubber produce, right? You produce rubber, so you grow rubber, but you grow rubber, but you cannot directly sell that. You have to make it undergo a certain process to be able to sell that or market that. So what does government say is, since part of the activity is agricultural activity, part of the activity is manufacturing activity, I will decide a certain percentage which will be considered as agricultural income and certain percentage which will be considered as business income. So what is that is, let's say, so first is rubber products. Rubber products from plant grown. If the rubber is grown from plants and then processed, 65% of the total income will be considered as agricultural income, 35% will be considered as business income. Coffee grown and cured. So remember here, I should grow the coffee and then cure it. Only if I undertake two processes, that is growing the coffee and curing the coffee, then 75% is business agricultural income, 75% is agricultural income, 25% is business income. If I grow the coffee, cure it, ground it, roast it, and then ground it, I undertake 4 processes, that is growing, curing, roasting, and grounding it. Then 60% of my income is agricultural income, 40% is business income. Why is that? Because I'm taking more process, I'm undertaking more process or more manufacturing process in this activity, so my business profits are also more. Then tea grown and manufactured. If I grow the tea and manufacture, then 60% is agricultural income, 40% is business income. If I only grow the tree and sell it, grow the tea and sell it, then it is agricultural income. And there is no process involved, manufacturing process involved, so there's no point in even discussing business income there, right? And then rule 7 also gives us a general rule for other products where both agricultural activity and manufacturing activity might be involved. What is that rule is? That rule says market value of agricultural produce used as raw material is deducted. No further deduction for cultivation expenses. What does that mean is, say for example, let's say I sell something for 1,000. I sell something for 1,000 and the market value of that product is, let's say, 800. So the balance 200 becomes my business profits. So the balance 200 will become my business profits, right? This is my business profits or business income. But what about agricultural income? Agricultural income would be whatever my market value is, that is 800 minus my expenses. Let's say I incur 500 expense. So the balance 300 is my agricultural income, right? So this is the general rule which states that whatever the value I'm selling at minus the market value is my business profits. If I sell it at 800 only, then there is no business profits here, obviously. So whatever is the market value of the produce deducted by the sale value is my business profits, and whatever are my expenses deducted from my market value will become my agricultural income, right? So this is the general rule 7. Okay, so this is it for this video. So today we have learned what is income, a very exhaustive definition. Anything and everything is an income as per the definition because it's an inclusive definition. We understood what is India, what is the definition of India, what all territories can be covered under India or can be called India, and then we understood what is agricultural income, right? Then we understood the definition of agricultural income, what forms part of agricultural income, what does not form part of agricultural income, right? So this is it for this video. In the next video, we will discuss about undisclosed sources of income. What are undisclosed sources of income? Then we will look into the rates of income taxes, surcharge, rebate, marginal relief. And even we will discuss about these few topics in the next video. Thank you.